Hey, my name's James Wilkinson. I hope you're well. Inflation data's out. It's terrible news. So let's talk about what that means for property owners and property investors. Let's cover that in this video. Now, before we jump into this, make sure that you smash the like button over there. Go on, do that now. That really helps with the YouTube algorithm. So smash the like button. Go on, I'll wait. And while you're here, make sure you subscribe to the channel and hit the bell notification. We've got new content every single day. So we're one of the most authoritative property blogs, YouTubes out there. So go and check us out on our other videos as well. So what is going on? Inflation was expected to drop again this month, and it hasn't moved at all. Now, inflation obviously is when goods and services are going up in price, and the government has a target of keeping that around 2%. Because if you don't do that, then things just keep spiraling out of control. And you see this in countries like Zimbabwe, where they had thousands of percent and with inflation for many, many years. And so people at certain points didn't use the currency. They traded bread for water and vice versa and stuff like that. So it's very important to keep inflation under control. However, as a property investor, what does high inflation mean? Well, actually, it's kind of good and bad for you. So let me explain. Well, in the good sense, the debt that you owe, so if you have a mortgage, that's getting eroded by inflation. So that's good. So if you owe £100,000, the value of that £100,000 next year, the buying power, what you could get, is going to be the equivalent of 90,000 next year, right? So you've lost 10%, and that's kind of good. However, the bad side is that how we combat inflation is by raising interest rates. So we put the interest rates up, and doing that will start to push inflation down. However, this inflation is slightly different, and I've been reading a lot more on this recently, and a lot of people are starting to believe that interest rate rises might not have the desired impact, because the inflation is on the supply side. It's not me and you that are willing to pay more. We just have no choice. And because the gas and electric has such an important factor on food has obviously gone through the roof. We've got Brexit, and we were obviously printing a lot of money. It wasn't anything that we did. And often in inflation, it's because people get excited, they feel a bit wealthy, and so they're spending money, and that's bidding prices up, that's pushing inflation up. And so they raise the interest rates, it gets more expensive to buy stuff, and that pushes it down. So that's the demand side of things. But the inflation's stuck on the supply side. And so the problem we've got is that the Bank of England don't have anything else that they can do. They've got one tool in the toolbox, and that is interest rates. So because inflation is stuck, and it's stuck in the UK at 8.7%, crazy high. In France, it's around 5%, and it has been for a little while. In America, it's at 4%, half of what we've got. That makes a big difference to people, and that is a problem. Now, wages are going up, and in the private sector, wages have gone up 7.7%. So people are kind of catching up to that inflationary number. But that's a problem. You see, if we keep increasing wages, we could have something called a wage price spiral, and it can get even harder to get out of inflation. So this week, tomorrow, we've got the Bank of England meeting again. Interest rates currently sit at 4.5% on the base rate. America has just set out a rate rise, but now we were hoping that we were going to get 0.25% rise. Now more people are thinking that we might go up to 5% as a base rate. Now, what's that going to do to property? Well, that's going to hit everyone that lives in a house, because if you have a mortgage, then if you're on a tracker, your mortgage is going to go up tomorrow pretty quickly. Now, some people didn't pass that on last time, but trust me, they're going to this time. So you're going to get that passed on to you. Now, there's 800,000 people that are on a fixed rate mortgage. Their deals end next year. So in the next year, they're going to have a huge shock of maybe going from 1% interest rate up to 8% potentially, because if the interest rate from the Bank of England gets to 6, there's going to be a margin on top that could make the interest rate that you pay 8%. So what should you be doing right now? Well, if you already own a property, like I do, that I live in with my partner Katie, well, that had an option. Our mortgage comes due in December. Now, you can actually get your mortgage fixed 6 months early. So she's logged into her app or the online portal for the mortgage, and it gave her new rates. Although her deal doesn't finish until December, she was actually able to fix at 4.9% for 5 years. Now, if rates drop to 1% again, we'll just pay the penalty to come out. But it just gave us that little bit of certainty while we don't really know what's going on with the market. So that could be an option for you. Investors, you could do the same. If you've got a buy-to-let mortgage, call your lender, see if you can get a new deal early. Katie's deal doesn't come in until December, but we've got the agreement today, right? So we've got the agreement today. So from now to December, we're going to be on the low rate. December, the high rate kicks in. It's about 150 quid more per month, which isn't great, but it is what it is. It's better than what it could be. And so interest rate rises, they're going to impact the market for sure. We've talked about house prices weekly on this channel, what's going on, and we've said it takes time for the market to move. Just because the interest rates go up to 5% potentially tomorrow doesn't mean there's going to be a market crash this year. It means that people will then have less affordability, so they'll be able to offer less on properties. The buyers will sit on that, and the sellers, will sit on that. They'll think about it. They'll see, is there any offers out there? When they see there's not, they will start taking lower offers. But those completion dates aren't going to be until January or February. It takes a while for all this data to come through. So we really aren't seeing the impact that already the interest rates have had on the property market because we don't have the data, right? We've got some indications from Nationwide, from Halifax, when we do the updates that they give us, and they're saying, look, we're not seeing a crash on the horizon, but next month, when they give us the next update, who really knows what they're going to say? Because this wasn't on the cards. 8.7% inflation was not on the cards. We were told inflation would drop off a cliff. This was the language used by the Bank of England. Inflation would drop off a cliff in the second quarter. Well, we've had 2 quarters now, 2 months, we've got 1 month left. Are we going to have some big drops next month? Let's hope so, because inflation doesn't help anybody. As a property investor, I want prices to go up slowly. How I can make my money and how you can make your money as a property investor is by buying a property. The house prices are irrelevant and they're not going up or down, and you add value. That's the better way to be in a market. But when you've got this uncertainty, people like mortgage providers, they pull their deals, and we've seen that this week. HSBC, Santander, lots of places pulled all the deals that they had on the market because they wanted to see what happens this Thursday. And you'll see tomorrow. That's why you should be subscribing, and we'll give you an update on seeing what the Bank of England does. I think that they're going to go up 0.5% tomorrow. No one knows for certain, but it's looking more likely that it could be 0.5%. The government are saying they're not going to help people with mortgages. They're saying the inflation is the biggest priority to sort, and that's what they promised to fix by the end of the year to get it to half what it was. It was at 10, so they want to get it to 5. So let me know your thoughts. Did you think, if you were watching any news outlet yesterday, I know other people will say, well, come on, we know they're always wrong, but everywhere was saying we were going to go to 8.5, which wasn't great, but we actually stayed at 8.7. Let me know your thoughts and comments. What do you think it's going to do for the property market? I think it does bring opportunities. I've got some deals coming through now, and it's been a bit dry on deals recently. There's been people on the market that wouldn't have some good prices, but I've got some good leads this week. 2 very good deals that I'm looking at. Some people commented and said, well, if someone's willing to take 30%, that shows the market's crashing. Well, that's one person out of an area where there was 100 deals on Rightmove. So it was 1% of the market. But There's going to get more of those. And now's the time to learn how to do property investment. So while you're here, make sure you click on the link below. Check out the Property Accelerator. We'd love to have you involved in that. You can learn all of our programs and courses in one place, and you can try it for £1. So go and do that now.